What's up, good people? How you doing? Hey, it's time for another Fed meeting. Guys, you know how this goes. My name is Larry Jones. This is Stock Up. We're gonna go right into it, and let's go see what they're doing. And you know what? Let's see what they're talking about, and then we'll come right back.
Folks, we're going to pause right there and go to Steve Leisman now with the Fed decision. Steve.
The Federal Reserve hiking interest rates by 0.75 percentage point, bringing the funds rate now to a range of 2.25% to 2.5%. The Federal Reserve making plain and saying that ongoing increases in the target range will be appropriate in the months ahead. The committee is on track as well to continue reducing its balance sheet. It's at a reduced rate right now, $47.5 billion, en route to increasing that by to $95 billion a month in the month of September. The Fed downgraded the assessment of the economy, saying it sees softening spending and production out there. It had been more upbeat in the prior report. It still, though, sees robust job gains and a low unemployment rate, but it also sees elevated inflation, notes a series of sources from that inflation, supply-demand imbalances, higher food and energy prices, and broader price pressures as well. Mentioning, of course, the Ukraine war as a source of inflation, but taking out the idea of the China lockdowns continuing to increase inflation. So that's maybe a source of potential optimism there. And finally, it was unanimous. Esther George, who had dissented last time wanting 50, did not dissent this time. A unanimous decision by the Federal Reserve to hike interest rates by 75 basis points. Tyler?
All right, Steve, thank you very much. So that looks like pretty much, Kelly, what we expected to see. Let's go around the panel, and I'm going to go back to David Kelly and ask you the simple question. Here's another 3/4 point hike. We haven't had back-to-back hikes of that magnitude as long as I've been in the business of covering financial markets, David, as I recall. I can't remember another time. If so, it must have been the early 80s. But is this the peak rate hike that we're likely to see in this rate hiking cycle? Which is not to say we're not going to have more rate hikes, but do you expect more 75 basis point rate hikes as we move into September, November, December?
No, that's exactly the point, Tyler. I think we're seeing peak inflation and peak rate hikes. These two back-to-back 75 basis point rate hikes in June and in July, I think will be the highest rate hikes we get in this cycle. I think in September they can back off to 25 to 50 basis points. And the reason for that is I believe both the July CPI number and the August CPI number will be in the range of sort of 0 to 0.2%, much milder inflation coming off the back of these lower gasoline prices in particular. And I think slower economic growth is a reality by the time you reach mid-September. So I think next time the Fed raises rates only 50 basis points, but obviously they're still being aggressive right now.
Well, so there we got it, good people. Let me come over here. So there we got it, 75 basis points. That's what the market expected. That's what we all expected. The market priced that in. As you can see, the markets didn't react extremely negative to that news. Let's just take a look here. Let's refresh. As we could see here, yeah, the markets didn't budge much. Just like we thought. We knew that it was priced in. So for those of you that are just coming on, the Fed rate hikes is 0.75 basis points. All right. So 0.75%. They didn't come down to 0.5%. They didn't go up to a full percent. I disagree with everybody that thought they would go to a full percent. They only went 0.75 basis, 0.75 basis points. All right. Hey, I got a meeting, so I dressed up. I didn't dress up for this FOMC meeting. I got my own meeting coming up after this. So thank you, guys. Hey, the last meeting we ended kind of, yeah, it's the same deal. And so here's what's going to happen, good people. We've been through this before, right? So they come out, the Fed makes this announcement, right? And so for those of you that haven't been through this, what's going to happen is he's going to have a meeting. So I will probably post another video tonight. Make sure you look out for tonight. And while he's talking, he's going to get these questions. There's going to be some soft questions, Let's keep it nice. Let's keep things cool. It's dog and pony show to me. And then you're going to have some hardball questions. And then when you get the hardball questions, you're going to see the market react. Now, he's coming out today a little later, which is a little concerning, right? The White House is trying to downplay, all right? Not change the rules. A lot of people think the White House is changing the rules, but they're trying to downplay a recession, which every sitting administration does. This is politics. This is why I hate politics. And so they're trying to downplay it and just talk about, we could be and not technically be in a recession and all of that. Let's just I don't look at what people say. I look at what they do. So when they come out and preempt with all of this info, then that's what's kind of crazy. Hey, what's up, good people? I got something else that I want to talk to you guys about that came up just before this. My people from the Netherlands. Hey, what's up? Listen, hey, fam, from Nolans, what's going on? Well, thank you. I got my Sunday best on, Hey, let's look at this. Something else I want you guys to look at. So this is what happened. Senate passes bill to boost U.S. chip production, all right? And China competition, right? It's going to the House next. Of course, the House has to pass it. It will pass the House. And then the president will definitely pass it. Yep. So that is correct. Hey, what's happening? So I'm trying to. Hey, greetings. Turkey. We got turkey in the house. All right. So they passed the chip bill, right? And that's interesting to those of us in America because Sister Pelosi has this crystal ball, and they make these big plays based on things like this. But it wasn't technically her; it was her husband that made the call, supposedly, hypothetically, and all of that. Like Keenan Gray says, I don't want to get sued, but this chip bill passed, and it's kind of crazy that they put such a large bet on it, knowing that it's going to pass. We can talk about that later. That's politics, right? So look at this. This is what also happened. Pending home sales fell 20% in June versus a year earlier as mortgage rates soars, right? And so that's to let you know that these higher interest rates are actually happening. They're actually working. This is what the higher interest rates are designed to do, to slow down demand. When you slow demand down, it slows down inflation, right? Because the problem with inflation is you got a product and you got 10 times as many people that wants the same product, and that drives the price up. So if you kill the demand, then the prices have to fall. And that's what's happening with the home sales. And this is a direct cause of higher interest rates. As a matter of fact, the reason why gas is falling right now is because of demand. Demand has fallen. People are driving less, and demand has fallen greatly. And so, the prices have to fall down to try to get people to buy it. It's kind of a crazy loop if you really think about it. All right, good people. Hey, what's going on? I'm going to keep this one short because I will be back again tonight. We'll be back again tonight, and we'll talk about what the Fed, everything that he says. It's just a long, boring meeting. It's like watching paint dry, and we just not going to do that. Hey, where y'all from? Talk about Cigna? I really don't have enough to talk about it, okay? Nigeria. What's happening? Nigeria. Wow. New Zealand. Hey, where we at from around the world? Yep. Switzerland. Hey. Yep. So the new CPI numbers. The new rate hike is 75 basis points. 75 basis points. All right. Hey, we got Sweet Home, Alabama. Lord, I'm coming home to you. What's going on? Tampa. Let's do it. Hey, New Mexico. All right. Let's do a mic check. Where y'all from? London. All right. London again. Long Island. All right. All right. Hey, I love you guys. Virginia. We got North Carolina. We got Virginia in the house. So listen, this is what we're going to do, good people. Hey, I appreciate you guys. Is that Israel? Wow. Colombia, Texas, Pittsburgh, Dallas, Fort Worth. Look at this from all over the world. Hey, listen, this is what we're going to do. The Fed is going to be talking, and let's see if we got any breaking news. The Fed is going to be talking. Everything is kind of holding what it is now. We're thankful that the market is not tanking because the market has already priced in the 75 basis points. For those of you that are just coming in, the new rate hike is 75 basis points, just like the market has already priced in. We knew that was coming. You know, we didn't go a full 1% and we didn't come down. And so what I think is just like the gentleman at the beginning of this video said, I think that there's no meeting on August. And then the next meeting, we will probably have 50 basis points. We will see how if inflation is peaking, and then they can pull back. That will be good for the market. All right. One more. Uncle Larry, please, you have been able to check on APPI? No, I haven't. There is one Jamaica in the house. There is one play that I did this morning, and someone talked about it late last night. So I'm going to talk about that one tonight. That's what I'm going to do. I'm just going to keep this about the new Fed rate hike, and I'm going to leave it right there. Is this India in the house? India in the house. All right. East St. Louis, South Africa. Yes, yes. Dubai. Okay, so here's what I'm going to do. I'm going to talk about this. Yeah, they had some breaking news, but it's not much. So this is what I want to say. If the market tomorrow's meeting or tomorrow's news is going to be much bigger than today's news. We will find out if we're in fact in a recession or not. There's a lot of Portugal in the house. There's a lot of talking heads now. The White House is trying to get in front of it, which is, they're trying to prepare you for almost like prepare you for the worst. And so you got to listen to what's not being said, right? And you got to listen to why everybody's putting these early meetings out to kind of like soften the blow, right? And so we just got to be careful. Now, if the market remains flat, then I'm going to buy a real light, actually, just dip my foot in the water to see if it's warm. But if the market does tank, I am going to be buying, and not all of my cash. I'm not deploying all of my cash. I'm going to I'm going to bite it. I'm going to cut it up into small pieces. Now, I will be buying much heavier than my $5 a day. That's a little different. So I will be buying if the market tanks. Okay. And so I'm going to leave it right there. We're going to listen to what the Fed says in this long and boring meeting. We're going to watch the market reaction, right? And then I'll come back to you tonight. Hey, if you haven't, and this is helpful to you guys, please hit the like, subscribe, and notification bell. If you're not subscribed, please subscribe to this page. And I'm going to keep you guys posted to the best of my ability. Then I just did a trade on my Webull and my Moomoo. I did the same. I bought the same stock pre-market this morning, and I'm going to discuss that in the next video tonight with both trading apps. And I made money with both, and I'm going to show you what I bought and how I bought it. I'm not going to talk about it right now because it's very risky. Okay. Hey, I love and appreciate you guys. Hey, thank you. Blessings. And we will see you guys tonight. Make sure you stay tuned and make sure you are subscribed to the page. We'll see you tonight. Live, love, laugh, and learn.